All right, today we're jumping into a crucial tool you see all the time in high-speed real estate, but maybe you don't know the name for it: hard money lending. You ever watch one of those house flipping shows and just wonder, how in the world did they buy a property so fast? I mean, in days, when a normal home loan can take months to get. Well, that's the exact question we're going to break down today.
To really get the answer, you have to understand the investor's biggest challenge. It's this fundamental tug-of-war between the way traditional banks operate and the crazy, fast-paced world of real estate deals.
Okay, so let's get into this. On one side, you've got the traditional banks. Sure, they're reliable, but man, are they slow. They're built on this system of careful checks, super strict credit rules, and just mountains of paperwork. Then on the other side, you've got real estate investors. They live in a world where the best opportunities are gone in a flash. You see the problem, right? It's a total mismatch. So how do you bridge that massive gap? How do you connect the slow, methodical world of banking with the lightning-fast world of investing? Well, you have to find a totally different kind of money. And that brings us right to the hard money loan. The most important part is right there in the definition. The loan is based on the hard asset, the property itself, not on your credit history or your pay stubs. And that, well, that changes the entire game.
I think this analogy is perfect. A traditional bank loan, that's like flying on a commercial airline. It's affordable, it's reliable, it'll get you there, but you're flying on their schedule. A hard money lender, on the other hand, is like having your own private jet. It's ready to go the second you are, it's unbelievably fast and flexible, but you know that convenience and speed come at a premium price.
So, what does that premium for speed actually look like in the real world? Let's take a look at some actual numbers from our source, a San Diego-based hard money lender, to get a really clear picture of how this works. First off, the speed. 14 days. That's the average closing time. Now compare that to a conventional mortgage, which can easily take 30, 45, maybe even 60 days. In a competitive market, that difference is absolutely everything. Next up, leverage. These lenders can fund up to 90% of the purchase price and sometimes even 100% of the renovation costs. This is huge because it lets investors keep more of their own cash free for other parts of the project or even another deal.
And believe me, this isn't some small niche corner of the market. Just this one lender alone has funded over $100 million for investors. That just tells you how massive the demand is for this kind of rapid financing.
Now, what's really interesting here is that hard money isn't just a one-size-fits-all thing. It's much more like a specialized toolkit with different tools designed for different kinds of investment strategies.
First up, let's open the toolkit for the classic real estate investor, the renovator.
Their go-to tools are fix and flip loans. That's the bread and butter of this industry for sure. And then there are bridge loans, which solve that classic timing problem of needing cash to buy a new property before you've managed to sell your old one. It bridges that gap.
Next, for the folks who are starting completely from scratch, we have the builder. Their toolkit has things like ground-up construction loans, which do exactly what it sounds like. They'll fund a project from an empty plot of land all the way to the final build. And if they're scaling up, there are multifamily loans designed specifically for properties with multiple units, like a duplex or an apartment building.
And finally, there's a set of tools for a group that traditional banks often give a really hard time to: the self-employed investor. Okay, now this is fascinating. Their toolkit has something called a DSCR loan. With this, they qualify you based on the property's potential to make money, not your personal tax returns. And then there are bank statement loans, which let you use your business's cash flow as proof of income, completely bypassing all that typical W-2 paperwork. For an entrepreneur, this is a lifesaver. So, with all this incredible speed and flexibility, you have to be wondering who actually qualifies for these things. Well, this is where we get to the trade-off. Here's the catch. Hard money loans have higher interest rates. There's just no way around it. And what's really important is that the more experience you have, the better the deal you're going to get. These lenders absolutely reward a proven track record.
And this table illustrates that point perfectly. Just look at the tiers. A bronze borrower, somebody with just 1 or 2 deals done, gets a max loan of 80% of the value and a rate close to 13%. But look at a platinum investor with over 10 deals under their belt. They're getting 90% LTV and a rate that's closer to 10.5%. Your experience literally pays off.
And for investors like Alex here, that speed is exactly why these loans are a game changer. When you use them the right way, for the right project, they give you the velocity you need to compete and actually win in today's market. So that leaves us with the central question, right? Hard money offers incredible speed and amazing flexibility, but it comes at a higher cost, and with terms that definitely favor the experienced players. For any real estate investor, the challenge is always deciding when is the price of that speed worth the risk.